But more importantly, the reason why we prefer to buy growth companies is it's really just so much more efficient to allocate cash flows at high rates of return in terms of using them for making acquisitions or building out your businesses than giving it back to the shareholders as a tax inefficient dividend. You've done a lot of thinking about this, so I'll turn it over to you to talk about the problems we have with dividend investing.
Many problems. I think the reason why people like dividends, beyond the tax aspects in Canada at least, is because it's real, tangible return to you. Like you're actually getting money back into your pocket.
That's right.
As opposed to if a company makes an acquisition instead, there's a questionable payoff. You don't know whether you're going to get your money back, and it's kind of vague in the sense that the multiple of the stock might go up or down.
That's
so
right.
It's not as direct of a return to you as a dividend would be.
A lot of people view the stock market as a casino, or they view it as, something intangible. There's numbers on a screen moving around, but when you get that cash flow, it's real. And it feels good when that dividend comes in 4 times a year and that dividend increases.
But I think,
and people live off and people say they like to live off that cash flow.
But the reality is that dividends are a output. Like, they should not be viewed as an end in and of themselves. And the reason is that you have to really think about where dividends come from. Dividends come because the company makes money and they have extra cash flow that they can give back to the shareholders. Too often what you see is that, and you see this a lot today, where companies promise to pay a certain dividend. They'll say, we'll pay, let's say, $1 a dividend per quarter. And then the investors are like, this is awesome. We're getting $1 every quarter. And then we want you to raise it every year. And so the incentive flips around, where instead of the company saying, okay, we made some money and we're going to give you back the money as a dividend, it's give us money, give us $1 regardless of what's happening to your business.
That's right. I bought your stock for the income.
Yeah.
And if you don't give me the income, I'm going to sell your stock and your stock's going to get crushed.
And that has, and this has been made worse, I would say, because of dividend strategies such as dividend growth ETFs. There's, is it the term dividend champions?
Yeah.
Like
Aristocrats. Aristocrats is like a
screening for names that grow their dividend every year.
Yeah, for a certain level of time, for a certain length of time.